Hey traders, welcome to Elliott Wave Cafe daily video. It is the 25th of January. It's almost 6 o'clock here in Chicago. And I have a lot of charts to show you and things to go over. The question that we have is are we ready to break out of this downtrend? Is the bear market over and we're ready to begin a much larger third wave? Or we're about to do just a B wave rally and then turn back to the downside. Let's take a look at the markets and the arguments for both sides in here, and we'll see which one wins. I'm starting to think that this in here might work out. We're very, very close to breaking out. We have the Federal Reserve meeting coming up in here in about a week. So next Wednesday, there is a 25 basis point pretty much baked into the market that they're going to raise those interest rates from the current target rate of 425, 450 to 450, 475. And then, there's probably maybe one more coming here that has about an 80% chance for the March meeting to raise it 25 more to about a 5%. All right, so before we get started, I want to show you that you can find me here on Twitter. This is Elliott Cafe on Twitter, or just type in the search bar Elliott Wave Cafe and you'll find me. I usually post interesting things about the market, different charts, commentaries, stuff that traders respond, and we have a conversation here about the markets in general. Here is kind of what I've had this morning about Bitcoin. I think we broke out of here late in the day. We'll see if there's going to be a third wave or not. I'm going to go ahead and take a look at that. Also we've had this kind of ABC in the S&P 500 that reached these high levels here. We closed the gap and pushed to the upside. I think we're going to break this kind of 40-40 back in here. We're going to take a look at those counts. But yeah, go ahead and follow me on Twitter in here, and you're probably going to find that helpful. And then one more thing before we get going, I also want to invite you to take part of my pro trading room in here. It's a very kind of simple room. It's my own kind of private trading channel. You can take a 30-day free trial, with the 1-month subscription. You can cancel anytime you want. You don't have to stay if you don't want to. And then this is the stuff that we're doing on there, from analyzing stocks and, live trades and, Bitcoin, altcoins. I have daily updates every single morning following all the major markets with counts and commentaries and all of that. So, if you want to try that out, go ahead, and there's a link below the video here on YouTube, and it's going to take you to this bot, and then you just, go back in here and choose what you want. All right, so let's jump over and take a look at this market, and I'm going to start over with going to my macro daily routine in here. I'm taking a look at the S&P 500. We've had another pretty decent day. We opened, it was pretty bad overnight, especially because we had Microsoft earnings, and the markets kind of sold off after the close into the overnight session. But it continued to kind of look pretty bad till about mid-morning, and then by lunchtime we started to recover, and then we almost retook all those losses, and we almost closed positive. We just lost right here just a little bit, almost flat on the day. We are sitting above the 200-day moving average. You see it in here in green. The volume is pretty good in here. You can see the accumulation distribution line is starting to point higher. The PPO is also pushing to the upside in here. That's the MACD version. We seem to have growing momentum for a break to the upside. So I'm paying attention to that and see, how that's going to resolve, but definitely very interesting. We actually bought Amazon today on the dip, this morning, and we're up about, I think, for almost 5% move on the day, and it's been a pretty good one. We'll see. I'm probably going to add more to the longs if these markets are starting to break a little bit stronger in here. Take a look at the NASDAQ as well. Look at the accumulation distribution line is just going straight up now. PPO breaking higher. It's the only index that's below the 200-day moving average. So I'm really curious, once it breaks, out of here what's going to happen, but the IWM and the S&P and the Dow, they're all above the 200-day moving average, which is a positive bullish development. This market has been testing these lows several times. It wasn't able to break, and we seem to be pushing to the upside. Let's take a look at the Nasdaq Composite. Just a similar story. So it's pretty much the same like the Nasdaq, except that we have a lot more stocks in here. I'll show you an interesting breadth indicator here with the 52-week highs. That is the first time since 2021 that list is starting to improve and look pretty decent. So that's going to be what I'm going to show you. Then I'm taking a look at the Dow Jones, which has been pretty flat. Has been doing, pretty bad comparing with the rest of the markets. There is a little bit of a rotation happening now, from some of these kind of safety sectors back towards more of the riskiest part of the market, but the accumulation continues to unfold in here. PPO is pretty much flat, so there's not a lot of momentum, but it's probably going to start to move once we break above 34.5 on the Dow Jones. The Russell sits above its 200-day moving average. We have the golden cross right here between the 50 and the 200. It sits at this big level right there on IWM. You can see the line, it's not even drawn out, but visually you see that this 187, 188, it's a big resistance. I think we're going to crack through it and push to the upside in there as well. A little bit less volume obviously in this. I mean, you're only having about 180 million shares. If you look up here, you have 341 million on the Dow Jones. And then if you start moving, to Nasdaq Composite, right, or in the kind of the 4 billion mark, back in here on the Nasdaq, you're up into, 1 billion, in volume, 2 billion here into the S&P 500. So, some of these other markets are a bit smaller, but the patterns continue to look pretty decent. So let's see what happens in here once we get the breakout. It should come with more volume in here. Hopefully, that kind of follows the price, and we should be able to break out of there. Bitcoin continues to act pretty well. I think we're running towards the end of this large third wave. There might be a fourth wave developing in here that's comparing with the second. I'll show you my counts in there. PPO, it's losing a little bit of momentum in here. So we'll take a look at that. RSI is also dropping, but nothing really significant. It could continue though. So we'll take a look at that. Two of those counts. Bonds have been pretty much flat. We're sitting below the 200-day moving average. We're waiting for a crossover between the 50 and the 200. Yields are pushing down, but it's pretty much a flat market. If this market, starts to sniff that the Fed is going to start cutting rates or pausing in here, I think we're going to get a stronger move upside in bonds, lowered in yields as well. You can see back in here the Treasury yield right now, it sits at about 346. We topped in October, pretty much at the same time that the S&P 500 bottomed up in there at about October 13th. And since then it's been a straight move down. So we went as high as about 4.2, 4.3 on the 10-year yield, and we're sitting about 346. We'll see, how this develops, but probably the markets here are waiting for the Fed and some kind of a guidance happening out of there in about a week time. Dollar index continues to drop. It's in a pretty strong downtrend. We topped back in September 28th on it, and it's been a straight move down from there. This has been helping risk assets rally, and even though we're getting a move into growth since the beginning of the year, a lot of the emerging markets and a lot of the markets outside the United States actually starting rallying much sooner than that, and that's due to the dollar kind of coming down. I think there's no solid evidence yet that we're about to turn in here, but I think as we're approaching this 100, we're probably going to start to get a correction out of here. Now, I'll continue to watch this daily time frames. There is nothing serious just happening just yet, but I do think that this was a fourth wave, and we're running into some kind of a fifth wave decline, trying to finish it off towards 100 in here, and then we'll probably going to start to have a correction. So as people were going to get excited about the breakout in the markets maybe, and about cryptos, we're probably going to reach a low in the dollar, and then we'll have a little bit of a correction just to kind of keep the bulls honest. and the dollar bears as well, and then we're probably going to correct and then begin the next decline again. That's at least what I'm thinking by looking at the market here. Gold, it's been pretty relentless. So if you look here, right, the moment the dollar topped, the gold bottom as well, it had the triple test of these 1625 lows, and it's been in a pretty good uptrend in here. You know, I do have still a bearish count in gold. It's starting to look like it might not pan out, but either way, you know, we should be getting some kind of a corrective move in gold, because this is a wave 1. You know, we're supposed to be getting a wave 2 pullback, and maybe that's happening once the dollar corrects. Let's take a look at the PPO. It's still pretty good. There's no divergence in here. There's not a lot of accumulation, you know, yet in this market. Maybe we need to trend a little bit more, but it's definitely up into, you know, a kind of trending range here towards 74, 75 RSI, no divergence. So, you know, no signs yet. I do have a short GLD at 181, 182 that expires tomorrow. You know, we'll see if I'm lucky enough for it to close below 181 on the GLD. I might not, so I'll just kind of close that trade. But you know, I give it a little bit more room, and you know, it's probably not going to pan out. I do have another short that expires on February 17 on a short credit spread, but that's 176, 177, I think, on GLD. So I'm underwater on that one. I don't think that's going to work out. We'll see what happens. I still have about, you know, 3 weeks until that expires. So, you know, let's see what happens with gold going forward. Copper is also a market that's been, you know, kind of ringing the bell here that, you know, we're probably returning to some kind of a positive growth in here. Maybe it's just an excitement about China reopening, but it's been rallying pretty well since October. So it's a positive move in here. If you look also at the copper gold ratio, that's moving also in favor of copper. That says, you know, that things should be getting better. You know, but I've heard that this could have been just a big supply issue in copper, and that's why we're getting a squeeze higher. So we'll see how it goes. A little bit of a drop in volume as we're pushing higher in copper, so I'm going to be cautious on there. Crude oil hasn't been doing a whole lot. It looks like a three-wave move from these lows. You know, it's still in a big distribution in here. PPO just kind of broke to the upside. Maybe it's getting some positive momentum, but I'm not that interested in the oil market from the way these patterns are looking in here. And then look at the markets outside US. So this is Europe, Japan, Asia, you know, Australia. Look at this, just a pretty beautiful trend with the lows in the dollar. Big, you know, outside day reversal in here in October, whatever it was, 13, 14, 15 up in there. And it's been a kind of straight up train. I think this was a third, fourth, and we're doing a fifth. So again, be careful for pullbacks in the emerging markets there. And then, you know, look at the VIX that's still kind of sitting, hasn't broken clearly below this trend, below this kind of horizontal line in here. So I want to see a crash below towards 1817 to start to maybe assure more of an uptrend coming in here. So I'm still a little bit cautious because VIX is right here. The dollar, it's also, you know, probably hitting the brakes soon. You know, gold, it's been having a pretty good rally, so I want to be careful of any fake breakouts in these markets, right? It doesn't mean that, you know, they're going to happen, but you know, I'll feel much better if VIX kind of start trending below this support levels in here. Let's take a look at the performance of the market since the beginning of the year. Look at the Nasdaq Composite up about 8%. You know, New York Stock Exchange 4.6, Dow Jones a mere 1.8%, S&P 500 4.6 since the beginning of the year. So again, just a move into growth and tech and risk that's been straight on since the beginning of the year there. The S&P 500 sectors, communication services from the beginning of the year up 12%, followed by discretionary. People are dropping, so technology as well, 7.6%. People are dropping staples, they're dropping healthcare, they're dropping utilities, they're also dropping energy in here, you know, industrials, not that much. Looks like financials are sitting there okay along with the real estate, but the big move was into these sectors back in here. Let's take a look at the relative performance in here versus the S&P 500 on a rotation group. So this is the benchmark S&P 500, and since since around December 24th, right after Christmas, when we started to kind of rally in here, you could see the communication sector in here was kind of doing the best. I mean, look at the move out of there at the rotation. Look at the XLY, still lagging, right, overall, but with a pretty good performance. And then look at the technology sector in here, trying to kind of come back from the lagging quadrant. All these sectors were doing pretty bad, even since October lows. But you can see in here on a pretty beautiful graphic that the XLE is dropping, XLI, XLE, I'm sorry, that's XLB, XLE, XLF, and all these sectors here are coming out of favor as we're rotating back into some of more of the riskier sectors here since the end of December. So that's just another way to kind of look at it. And, you know, if I move this, you will see, you know, kind of where we were basically at the end of October, right? I mean, look, energy was up 26%, so still it was energy, industrials, financial materials, healthcare, staples, right? They were still pretty defensive as we were making these lows, and then as we were kind of coming out of those lows, those sectors starting to come out of there, and then some of the more riskier ones were starting to kind of push to the upside, XLK, XLC, and that trend seems to continue, and now they're probably going to move up into the leading quadrant and accelerate those trends to the upside. Let's take a look at kind of what's going on inside the XLC sectors, as that's one of the strongest back here. These are the stocks inside there, and you can see since that December dip that we've had right after Christmas, Warner Brothers here, WBD is up 58%. You know, Paramount up 31%, Netflix 24%, Walt Disney, you know, Charter, Meta Platform, Comcast, AT&T. So big moves into the communication, and Meta in here seems to be the one that's performing pretty strongly in here. I mean, it's got a very strong heading, while let's say some of these green ones, Comcast and you know, telephone, are just pushing, kind of losing some of their relative strength. So go ahead and take a look at this list, you know, and it kind of shows you what's coming out of favor and what's going into favor as we're moving into the month of February. All right, let's take a look at one more thing in here. I just wanted to show you the relative strength of all these sectors and kind of how we're moving from one place to the other, and that's well seen in here where you're comparing the S&P 500 with all the sectors. So this is the relative strength of XLK versus SPX. Let me just kind of get rid of the line of the cross, and then we're looking communication. So you can see in here, I put the blue line, it's those lows at the end of December, and you know, look at kind of how the market's starting to move in XLK. Look at the XLC as well. Look at XLY. Look at the financials. You know, it's starting to lose a little bit of momentum in here, but turning back to the upside. Now, industrials down, energy flat, utilities down, healthcare down, staples down. So all the sectors, this line in here, this red line, it's the top of the market that we've had back in 2022, right, when we began the year. And you know, all these sectors were coming out of favor, were underperforming the market. XLK, XLC, XLY, right? Financials were pretty much flat. Industrials were doing pretty well, but look, energy straight up outperforming. Utilities, healthcare. So everything that was defensive, staples back to the upside. So now we're getting a rotation out of these defensive sectors into some of the risky sectors, and you know, this could have legs. I don't know if this is a head fake or not. I mean, it could be very interesting, but this is what the market is telling us right now, and that's why I wanted to kind of show you that. Also, I wanted to show you what's happening in terms of new highs versus new lows. So I'm looking at the New York Stock Exchange. This is the top quadrant. This is the top you know, square right here. Then I have the S&P on the second part right there. Then I have the Nasdaq, and then I have the Dows. Now look what happened since let's say December 27, December 28. Everything that's to the right of my cursor, or my gray line in here, those green candles up in there are new 52-week highs. And here is a zoom out version. So since those lows in December, we're starting to get a lot more green candles. The markets are making new 52-week highs underneath the surface, inside the New York Stock Exchange, inside the S&P 500, inside the NASDAQ. I mean, NASDAQ has been red for a long time, and we're barely red at the moment, right? We're dropping just slightly, but most of the stocks in here, a big percentage of them are moving to the upside, and a number of stocks are making new 52-week highs. Dow Jones, I mean, it's just a few because there's just 30 in there, but we're getting more green than red. We're getting more green than red, more green than red, and that's that's a sign of strong breath in this market. So I need to listen to that, guys. And if you're a bear out there, and if you're not following this, I think you should. The counts are the counts, and we're going to go over them, but what's happening underneath the market here, it's important because that helps you put the count into perspective. So let's see what happens in here. We're about to get a golden crossover here in the S&P 500 as well. Let's take a look at the NASDAQ. This is the NASDAQ composite, and the new highs minus the new lows in here, and it's the first time, look at the circles, I put this on Twitter as well, since back in November 2021, since we're getting a move above the zero line in here, right? It's the most significant one. We've had just a little bit of a head fake right here, right in August, just a small when we had that rally. But then we dropped lower, we made a new low, we made a new closing low back here in December, but it's been a straight shot since then, and we're getting, some 52-week highs in here. The difference between those and the lows, it's growing, and it could be starting to look like something like this in here, right? We'll see if it's just a blip and we're turning lower, but I don't think so. So that's, again, another important sign. Now, a couple of things to caution. The VIX, like I showed you before, right? Look at what happened when VIX kind of hit the support lines in here, and you had these rallies. The market tended to sell off in here, so it's important that VIX breaks below this 18 line, this 1830, 1850, and it gets back towards 16, 15, and 16 in the VIX. That could lead to a stronger trend, and you will take the risk off the market. Okay, for right now, it's still a nifty situation because you're right at the trend line, about to break out. VIX is sitting right here at this support. And if we're not breaking lower, right, there's a risk of a big reversal. So, this is just another visual of this massive support into VIX that we need to crack to break to the downside. Then a couple of more things that are still concerning is the inverted yield curve. At the green, you're looking 10 minus 3s deeply, minus 125 basis points in here. You're looking at the 10 minus 2s, that's 65 basis points negative in here. So this is still, a big concern that I have. And take a look also at the 2 minus 3s. Look at this. I mean, the yield on the 3-month it's 472, and the yield on the 10-year is 346. Right here. This is the inverted yield curve, and I don't know what this means, guys, but does this mean? I mean, this is telling you that the Fed, it's got to start cutting soon. That they've gone too far, too fast. This is kind of what the markets are telling us in here, with the 3-month being so high. The 2-year is not budging. It's not. I mean, the Fed funds future is above the 2-year rate, and who knows what Jay Powell will say at this meeting. But if he's hinting into cuts, it could lead the mother of all rallies, or the mother of all declines, right? If something spooks these markets, but definitely we're at a big juncture here. All right, so I talked about the Fed, and now it's time to get back and take a look at some of the counts. So that's why I wanted to show you, you know, a lot of these markets and arguments about kind of what's happening underneath. And I've been talking to my members here, you know, for the past week or so, kind of hinting to what's happening underneath the surface, what's happening in the market, and kind of how I'm starting to get convinced that, you know, there might be some bullishness preparing in here in this market. So, you know, listen, if you want to fade me, you know, that's fine. It's been working so far because, you know, I've been pretty bearish on Bitcoin and I didn't think it was going to break, you know, higher the way it did. So that worked out in everybody that fade me favor. This might work as well. So if you want to turn bearish, you know, this could be a big signal for you, but let's see what happens. You know, I'm going to show you Bitcoin here as well because it's got some interesting developments. So let's jump over to the counts and, okay, the S&P 500. So on the bullish side, you know, we're having this, you know, big decline trend line, this big decline trend line. I mean, some people are saying that we broke above it. You know, I don't really see it. I still think we're below it at the moment. I think if you're pulling into closing bases and some of these candles, then yeah, you probably did. You know, let's just kind of keep it honest up into the swing highs and, you know, let's get a clean break. I think if you're getting above 4,100, it's probably going to accelerate. That's the top of this move. Let's take a look at the bearish count. You know, if you still kind of hang on to it, right? W, X, Y, X, and another A, B, C, sharp C wave to complete Z of a larger 2. I don't think that's a second wave. It's a little bit too deep. It's a little bit, I don't know, too impulsive for my liking. So I'm providing you with an alternate in here that this could be A, and that's A, B, and then, or WXY for wave B, and you could still push a bit higher, overtake 4,100 briefly, and then reverse lower. By that time, you would be, however, you would be above this trend line, and that's probably going to be considered a bullish sign. So, you know, we could still get trapped in here. So I'm cautious, but, you know, it's you know, everything kind of showed so far hints that this might not work out to the downside. Okay, so that's the S&P 500. Let's take a look at the Nasdaq as well. I don't think I have a bullish count on the Nasdaq, but I'll just kind of work with you on this one. So the main count for a long time was that's a WX. This was an A. You know, this B wave, I've had it here, and then that's a 1, 2, 3, 4, 5. By the way this market is acting, we probably going to do this, go in an A, B, up in C, complete a B wave right above the trend line, and then reverse lower and do a C, right? So that's kind of on the bearish narrative. If you're breaking and you're starting to approach 13.7 in here, I don't think this B wave is going to be, you know, any more something valid, and we're probably going to have to look at this as a wave A, B, C, you know, and then that's a 1, 2, and then, you know, possible leading diagonal, you know, 1, 2, and then 3, 4, and 5. So that's the idea back on the Nasdaq. Let's take a look at the Dow Jones. So Dow Jones, again, on the bearish side, you know, if this is a second wave, it needs to get going to the downside. This is a little bit tricky because it still seems that this rally in here did not correct a whole lot. So even if I go, where's my bullish count? Right here, right? Even if I go bullish with the wave 1, you know, I don't know if I can place wave 2 in here. It would probably have to be some kind of an ABC flat, right? And that looks like a 3-wave move. So Dow Jones is not really, it's not an ideal 1-2 just yet. I mean, it does look like you might want to do another dip, you know. But who knows, if the markets are strong, then this might be all we're getting, right? Just a 1-2, you know, and then another 1-2 out of here, and then we'll break into the upside. So that's the bullish count on the, you know, on the Dow Jones. On, you know, on the bearish count, we're looking at that as a wave B, but we gotta stay below 34,712 in the Dow Jones. Okay, if we're taking, you know, that discount dies, and, you know, it's going to be hard to stay bullish. You would have to go maybe in some kind of a, I don't even know, maybe consider this to be still fifth wave of a wave C, but that's going to be problematic. So, you know, that's kind of where we are. That's why, you know, the lack of a sell-off in here starts to hint that, you know, this market are not responding to any more bearishness in here. So just kind of repeating that, but I'm still keeping them alive until they completely get kind of dismantled out of here. And then, you know, what was the one? The next one was Russell that I had on the list. So a WXYX, near the previous exit near 2030 in the Russell with an A, B, and then maybe one more push to complete a B, A, B up in C, and then a sell-off. Otherwise, let me see if I have my bullish, right? That would be this wave 2 in an A, B, C, and then 1, 2, and then you're starting to go. Okay. You know, and no, it's not ideal. There might be, again, just a leading in here, you know, followed by a flat or something. But, you know, that's kind of how you go to the upside from current levels, because I think the low was here, not here, because that looks like a 5-wave move. Okay, so that's probably your you know, your wave 1 in here, your wave, so you have a 1, 2, 3, 4, 5, and then 2, B, and then C, you know, and then that's how it is, you know. So, all right, guys, let's continue to take a look. You know, I'm gonna stop with this. I mean, there were a couple of other interesting things. I don't have enough time, you know, but I talk about, you know, a bunch of the things that I have in here with the members every single day. I mean, I talked about the ETFs, you know, about the stocks in here, Tesla, Apple, Amazon, all the other ones, you know, Bank of America. So, you know, go ahead and, you know, come and join the program if you wanted to see more, because I'm doing these videos every single day, and they're, you know, usually, I don't know, between 20 and sometimes even 40 minutes long, but I talk a lot about the market. So, you know, if you're not tired of my voice, you know, you can join it and kind of see what's happening on a day-by-day basis in there. But let's take a look at Bitcoin. And you know, so here was the move, you know, that we kind of anticipated this morning, because this looked like, you know, just like a bear flag. But I did caution even my members that, you know, I think that we're running into the later stages of this third wave in here. It looked like this fifth wave. I mean, that looks like a big third. All right, let me go on a wait hour. So you have your 1, 2 from the lows, right? And then you're having, let's say, a 1, 2 in here, 3, 4 flat and 4, and then, you know, then you got to do your 1, 2, 1, 2, 3, 4, 5, 4, and 5 for the third. You know, so I think, I mean, probably some people got excited on this, and now they're kind of paying the price because it's really pulling back. But let's take a look at the 12-hour. This is what I think should happen next. We'll see if that's going to happen, right? So that's the fourth wave. That's probably going to get back here, maybe towards 21,000, and then you know, one more push higher here in this wave 5 of this A wave. The reason why I'm putting an A wave in here is because at a larger degree, right, if you look from the highs, if we have a 5-wave moving a 1, 2, 3, 4, 5, and it's not C off a flat, that means that you'll be getting an A, B, C, you know, out of here, back, let's say, towards maybe 30 to 35K, maybe back into this, and then probably another move lower. So I'm going to count it like this for now until, you know, there's enough evidence that we should change it, right? So that's the only reason why I'm looking at it that way. But I don't think that we have yet a fully developed 5-wave move, right? So we'll see what happens with stocks, if they're going to break to the upside, maybe everything kind of breaks, and then we complete a fine, you know, 5-wave moves in here in Bitcoin, and then we're going to get the pullback. You know, back in here under the bearish count, you know, which I'm still holding for a little bit in here until, you know, it really looks ugly. You know, if it's an expanded flat, that's your A, that's an A, B, C in B, then you still got to do a 5-wave move, you know, 1, 2, 3, 4, and 5. For a flat in 4, you got to overtake 25 to 14 to do an expanded flat. That's how flats work, right? The expanded flats, they go above the origin of the wave A. So if that's the end of the wave A, origin of the wave B, so that's A, down in B, okay, and then you're doing a 5-wave move up there, you overtake 25 to 14, and then you sell off lower. This is an ugly flat. If this is it, it's going to take the cake, you know. So we'll see what happens. But I put an alternate 4 back here because, you know, you never really know if you're going to get this or not, right? So there's always a chance that maybe, you know, that this move in here was part of this, you know, of this degree of trend in here, of this minute degree. So this wave 3 moves here, this fourth wave moves here, this 5 wave moves there, and you're done, and you're beginning to sell lower, right? There's no real way of knowing. The way we kind of look at that is, you know, and I talk to the members, it's depending on how this behaves, this fourth wave back in here, right? If it starts to look pretty impulsive and you're starting to break below the 38.2%, right? If you're getting back here towards 20,620, if you're starting to kind of get below there and it starts to look, you know, kind of ugly and kind of directional like that, that means that probably this was the end of the move. 3, 4, and 5, right? Either as an A, like that, or as a wave, you know, C of a flat and 4. And instead of getting an expanded flat, you're just getting a running flat. Running flats, which are rare, they usually stop before the wave A, right? They're truncated waves, and they're not overtaking the wave A. So that's the idea here. So this is kind of what I'm going to monitor. You know, I caution people. I said, okay, fine, if you missed a rally or whatever, you know, don't get long now, because obviously, you know, it's the wrong time to do so. You know, wait for a correction, see what happens. Maybe there is a chance, you know, if we're getting, let's say, you know, a decent fourth wave. Let me just kind of put the labels back. You know, if we're getting a fourth wave in here and it starts to look corrective and you're coming in the previous fourth wave area towards 20, you know, there might be a trade up here to do a fifth wave. You know, other than that, you know, if this is pulling back more, or even if you're getting a 1, 2, 3, 4, 5, you know, you're still probably going to get a little bit of a setback right onto the next decline. And that's probably going to be, you know, the confirmation that, you know, one could trade, let's say with more confirmation now from the lows, that one could trade, let's say, a move higher in the C wave. And that's going to be a beautiful move up to the upside, up into the 30 to 35,000 initially. And then we'll see what happens from there. But this is, you know, this is the move. And that's what I'm saying. Like, you know, people say, oh, you missed this, or, you know, you're not happy that you didn't, you know, catch these lows in here. Well, it doesn't really matter, because, you know, once the markets turn around, right, and they're showing you, you know, unless you're doing this for a trade, there's no point in necessarily kind of trying to catch this. Now you have confirmation from the market that you might have already a base. You know, the markets are going to pull back, and then you can join the uptrend. And if it moves, right, and if it's not just a C wave, then it's going to go all the way up to 50, 60, you know, maybe even 100,000 in the future. So, you know, you're doing that with, you know, a little bit more wind at your back, you know, rather than kind of scrambling to say, oh my goodness, you know, is this the low? Is this the low? Is it going to break? You know, all this and all that. So anyway, these are not necessarily excuses. I mean, if you caught this move in here, you know, kudos to you, and it's fine, but it's kind of not how I look at things. I wanted to see, you know, things kind of starting to develop, and you know, now we're above the 20-day moving average as well. So that's a positive, right? If I go, let me see if I go back here, I think I have it. Where are you? Right here, right? We're cracking above the trend line, right? We're getting above the 20-day moving average. Probably going to get a golden crossover. You know, then we'll get the pullback, because usually even when you break below or above the 20-day moving average, the markets are coming back and retesting that breakout. Okay, so I don't think, you know, you're going to go straight up in Bitcoin without pushing back first towards, you know, at least 20K, right? And then we'll see, you know, kind of how it looks from there. And then, you know, they're going to be the next chance to the upside. So, you know, maybe a long video today, but I just wanted, you know, I just kind of combined, you know, the macro perspective that I have here, you know, with the counts and, you know, the relative strength and everything else, with Bitcoin, you know, instead of kind of doing them separately. So anyway, I just wanted to, you know, kind of remind you one more time about, you know, Elliott Wave Cafe up here on Twitter. So go ahead and, you know, follow me, you know, up here at Elliott Cafe. And, you know, we've been growing quite aggressively in here. I mean, I got 1642, you know, pretty proud of this, because I think a couple of weeks ago we were at about 1200. So, we gained a lot of followers here in the past 2-3 weeks. So thanks everybody for kind of, you know, sticking with me in there, even though sometimes my commentaries can frustrate people, or you know, they can be taken, let's say, you know, with, you know, people sometimes get upset if I'm a bit too aggressive in my comments. So, that's that. And then, you know, also don't forget to, you know, give a try to my program in here. You know, again, You got nothing to lose. You know, you can come here for 30 days, see how you like it. You know, come up in the chat room and you know, we can discuss charts, counts, suggestions, questions, whatever you got. And if you like it, you stick around, you know. So, all right, guys, thank you so much for watching, and I'll be talking to you next time. Bye-bye.